Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. We're talking to you today about one of our top 5 foundation stocks for your portfolio. One of our favorites that is down a lot, Lanny, almost $30 per share from its 52-week high. Can't wait to talk about this company.
Ooh, guys, hit that subscribe button. Make sure to smash that thumbs up here, guys. Filming this the night of September 18th. So that will be the stock prices when we evaluate these dividend stocks, let alone a top foundation stock, guys. Down $30 per share recently. They were recently near a 52-week high. But man, times are getting a little tough for the consumer, which may impact the certain consumer place.
We're talking ba-da-ba-ba-ba. I'm loving it. We're talking McDonald's with the golden arches, ticker symbol MCD. Yes, everybody. McDonald's, they are down in the last month 2.5%. So they're hanging tight in there. The big drop has really come from the 52-week high at the beginning, at the end of 2024. What's going on in McDonald's world?
Wow. Well, first, I mean, overall in the industry, there's a lot of turbulence right now. Whereas, same store sales year over year are pretty flat. Traffic seems to be down right now. Maybe people are dining in more, eating at home. Despite very modest price increases, obviously everything has had their significant price increase during 2023 and 2024 with the great inflation years. But it seems like people are really reeling back, possibly on the quick service restaurants. Your Burger Kings, your, again, McDonald's, Wendy's, you name it.
Yeah, and it's crazy. They're people are pulling back because those prices keep climbing. So they're bringing back that extra value meal. They're trying to bring back those $5 meals to lure those consumers back in. And I mean, I could tell you firsthand, every once in a while I'll take my daughters, we'll take them for a treat for Happy Meals, Lanny. Just say, Happy Meals get a little McDonald's treat. We pop in the menu. I have their app open, Lanny. Gone are the days where you get the 99-cent cheeseburger. Those days are long gone. The 99-cent fries. Just the fries on there alone, the cheapest one small was I think it was $3.50. The cheeseburger was $2.75. Double cheeseburger $4. I'm like, geez, yeah, that's
you used to get a double cheeseburger for $1.
Right. So those days are long gone. Luckily for me, when I do go, you use their app and you get rewards and it saves you. But we don't go there often because you're spending just as much as you are sitting at a nice restaurant at McDonald's. So these restaurants are great. They get you in and out. They offer you all these rewards, but if you don't do it, they're pretty expensive, and it's starting to finally show with the consumers.
Yeah, wow. So that sent their stock price down to $301.14 as of September 18th close.
Mm-hmm. And they're still, the crazy thing is they're basically flat year to date, only up about 4%. 5 years later, they're only up 36%. So there hasn't been a massive pop anymore for McDonald's over the last 5-year run, which I think is kind of fascinating.
Wow. Yeah, that is fascinating. Yeah. So they're bringing back a lot right now, trying to get those extra value meals going again, hiring a new executive to help lead AI, artificial intelligence within McDonald's, trying to find ways to help, with lowering cost within the restaurant. Obviously, that's always the goal with AI is efficiencies, cutting costs, and finding unique ways to attract consumers in. So they're not ones to shy away right now from AI. And if there's a company that could probably execute AI, it's probably McDonald's.
Yeah, margins are slim. So slim that every few cents you can save on a meal from AI taking the orders, the extra headcount you can cut out makes a difference for in that industry right now.
Cut that AI out, baby. No, I'm kidding. Yeah. So last quarter, though, 4% growth on sales. Diluted EPS was also up 12%. But we'll have to see kind of what goes on in these last 6 months or 2 quarters that we'll see third and fourth.
So let's run them through our screener where we look at the PE ratio, payout ratio, history of increasing dividends, and that bonus metric. Dividend yield, With that price as of September 18th, Thursday, that price is 301.14. Forward earnings from Seeking Alpha, 1234. That gives you a P ratio of 24.4x.
You know, at the market, probably, appropriately valued right now. I wouldn't say like deeply undervalued, but I wouldn't say it's overvalued. I think it's at value right now.
Yeah, I mean, you're not going to get a top five foundation stock cheap right now. They're great companies for,
Give me cheaper Mickey D's, please. But
yeah,
Bert, that payout ratio, man, $7.08 dividend, perfect payout ratio of 57%. That shows that they can pay it and they could grow it.
and to grow it, they have that 5 year dividend growth rate is 7.2%. They increase it for 48 consecutive years, according to Seeking Alpha. And in a couple weeks, Lanny, we're going to find out. Maybe not even a couple weeks. It's usually that last week of September. What is it? The last Thursday of September for McDonald's. It's the same day in September every month. It's coming up down the pipeline.
Oh my gosh, it's probably next week. Is it next Thursday at 4:30?
Yeah, it's this one is like clockwork. This McDonald's one, it always hits that spot. So that's coming down the pipeline. We'll see. Their yield, Lanny, is 2.35%. So a 2.35% yield with a 7.2% growth rate. That's a pretty solid 9.5% dividend compound factor.
Dividend factor, baby, over 9%. I'm loving that. Now, guys, as Bert said, only up 36% in the last 5 years, like in the market, the 215 billion my market cap. It's so funny that a lot of these companies are pretty much, it's like you have all the tech and AI companies, and then you have the
Everything.
other company that actually produces things that people, use and eat and consume on a daily basis.
I mean, you're not wrong. It's two different stock markets right now, and it has
Yeah.
been for the last year. It's very interesting.
Mm-hmm.
The question is, though, what about McDonald's right now? Again, it's fairly priced. I'm not adding to my position at 301. Maybe if we get some of those extra value meal stock prices for McDonald's, where say it drops down to like 275, that would
Ooh.
be huge. If it drops another 25, that would bump the yield up
Mm-hmm.
to over 2.5%. That would be pretty juicy for McDonald's. Bring that PE to 22. I think that would be a decent thing to snack on. Grab some fries at the bottom of the bag.
Look at Bert right there, just throwing in all the puns right now.
Yeah. What about you, Annie? What are your thoughts?
Yeah, I mean it's not undervalued. I would always argue that it's never like a bad time to buy a McDonald's stock, but there's better value out there. There's better value meals being offered.
See, it's
So
isn't it?
yeah, it's a good one to watch right now though. So thanks for bringing it up
Yeah.
to the table here, Bert.
Yeah. Everyone, let us know, what do you think about McDonald's right now? Are you grabbing the golden arches? Throw it down there in that comment section below.
Guys, just remember, hit that subscribe button. Give us a nice thumbs up. Let us know if you're loving it and what else you're buying out there, guys. And Bert, hit them with your sweet chin music.
You're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.